Witam po krótkiej przerwie. Dziękuję, że są Państwo z nami. Trwa 4. edycja konferencji Drugie Życie Budynków, Polska i Europa Środkowo-Wschodnia. Dziś zadajemy wiele palących pytań, szukamy na nie odpowiedzi. Teraz przed nami kolejne. Chcielibyśmy zaproponować Państwu rozmowę, dyskusję o tym, jakie są perspektywy dla naszego rynku na tych najbliższych 5-10 lat. O co martwią się inwestorzy, czym interesują się inwestorzy. Odpowiadać na te pytania będziemy w trakcie sesji Real Estate Market Future, Investment Trends and Threats. A moderatorem tej dyskusji będzie pan Krzysztof Sakierski, dyrektor w NHL Advisory. Witam serdecznie.
Witam.
I oddaję panu głos.
Dziękuję bardzo. For those joining us, welcome to the 4th edition of Second Life of Buildings. My name is Chris. I work at NGL Advisory, and I will be your host for today's panels, Real Estate Market Future, Investment Trends and Threats. Please welcome our panelists. Jan Kotrbáček, that's International Partner, Head of Retail Agency, C. Cushman and Wakefield. Kevin Turpin, Regional Director of Research, CE at Colliers International. Mira Kantor-Pikus, Partner, Head of Equity, Debt and Alternative Investments, Capital Markets, Cushman and Wakefield, Poland. And Justyna Kędzierska, Klukowska, Head of Berlin Hyp Warsaw Office, Berlin Hyp AG. Very nice seeing you. Hello. There is no question that the COVID pandemic has had a very big influence on the real estate market, a negative effect on retail, on hotels, on office segments. On the other hand, we're seeing a boost in interest in terms of warehouse, logistics, and residential assets. The question is, during today's panel, where we are at and where we're going. We will try briefly to go through a number of points, and hopefully we'll enter into a very interesting discussion to see different perspectives from different market participants. And I'm looking very much forward to our discussions during the next 45 minutes. So Kevin, you've been actively involved in the research in CE for a while now. There is no doubt that the pandemic had a substantial impact on the market. What segments do you think were affected mostly? And I also imagine that the impact was very different looking on different formats, different asset classes, so the answer will probably not be uniform.
Yeah, that's absolutely right. And again, every sector within real estate has been affected. Some more positively than others, and obviously some a lot more severely. And again, I think across our region in Central Europe, the pandemic has been dealt with differently by governments and have provided some more or less support to these industry sectors. So you mentioned it, of course. Retail has been largely impacted, mainly due to the fact that shopping centres and other retail formats have been closed on and off over the last 15 months, and we're seeing some slow signs of some of that opening up. Offices, again, there's no sort of major strict guidelines in a lot of countries. Again, it's down to companies to decide quite often, when they allow employees to come back safely to the offices, and we can, obviously, touch on some of those and how that's going to impact, the space availability and vacancy in light of, supply pipelines of new space coming online over the next few years. The hotel industry, of course, travel is a big thing, and that obviously is impacted on tourism, but it also impacts on the ability for investors to get out and to view opportunities for retailers, for other companies to go out and view opportunities in other countries. So that's also had an impact on investment volumes last year and continues into this year. So logistics, just briefly again, has had a lot of upside. But again, on the other side, there is the manufacturing side, which has also had its supply chains impacted. So it's not all black and white in that sense. But again, across the board, a lot of changes that people have had to make, and companies and decisions have had to make. and the different levels of support that they've had from official angles has differed from country to country.
Great. So looking at the market now, I understand that that's pretty much an overall snapshot of where we are in particular market segments. But if we would look 2, 3, 4 quarters into the future, how do you think those segments will bounce back, given the restrictions being loosened in different territories in a different manner, but still being loosened to a major extent? How do you think that will change the overall situation on the market?
Yeah, if we take the office sector, and I'll leave the retail to Jan, who will talk a bit more about that in detail. But the office sector, there's a lot of discussion going on right now. Again, about hybrid models and whether companies are deciding to hand back space, and a lot of these decisions are lease event driven. So again, if typically across the region, lease lengths are about 5 years. So of course, if you just signed a lease, just prior to COVID, you've probably got about 3 years, plus minus 3 years left of your lease to ride out. Some of those companies who are, where their leases are expiring or have expired throughout 2020 and 2021, will obviously be looking very closely about how, and speaking with their employees about how it's going to work going forward. So I think we're seeing vacancy creep up in many markets, and again, it's partly supply driven. So again, it is market specific. In some markets, we're seeing vacancy in double digits, and there's quite a bit of supply still to come for this year and next year and ongoing. And again, it's not easy to turn off. You can't just sort of shut up shop and go and work from home if you're building a building. So it's not easy to stop that supply pipeline as easily as it is just to pick up your laptop and go home. So again, we'll be monitoring that going forward. And again, from an investment standpoint, there is investors will be looking at those vacancy rates and how corporates are deciding to utilize office space going forward, and how that whole sort of flexibility creeps into lease agreements and also to flexible space.
Because I understand also that in terms of at least the short-term supply, some projects in the office sector are being postponed, right? So a number of market players are commenting that we may see an effect of that down the road 3, 4, 5 years from now, when we're going to have an actual gap in terms of supply. What's your view on that?
There is that possibility. I mean, certainly if you had a project and it hadn't been started, and again, perhaps you need financing to take that project forward. There perhaps are some more strict. And again, I'm sure someone, Mira, will talk about that a little bit later. But there is more requirement for greater levels of pre-lease in order to secure financing. And again, yeah, some developers will be looking at caution. And there's also the impact of which was already here before the pandemic is the availability of labour force actually to deliver that space, and of course the rising costs associated with that in a market where there is pressure on rents and greater incentives that are being offered.
Great, thank you, Kevin, for that. Jan, Kevin touched on a very interesting point regarding the retail market, and there's no doubt that the COVID pandemic had a very negative effect on that market. The real question is whether this effect has been uniform across the region, or whether depending on specific regulations in different countries, that effect was very much different. That's one thing, and the other thing that I would find and I know that our listeners will find very interesting, is how the prospects are looking for different parts of this market segment going forward.
Mm-hmm. Okay, so I will touch on the impact for various countries caused by closures of the store with non-essential goods. Yeah, so we have done study which shows that 234 days in Czech Republic has been store closed with non-essential goods. 163 days closed in Slovakia, in Bulgaria 140 days, Poland 140 days as well, Hungary 108, and Romania 90 days. Yeah, from that It's obvious the Czech Republic stores were closed for the longest period. Yeah, and Poland is 140 days, which is also pretty significant. It means that the retail, and mainly the fashion retail, has suffered the most. So we have seen when this is the closure of the stores, then we measured the footfall development, and we seen that there was a decline of 50% of footfall in retail and the leisure destinations. Yeah, in the Czech Republic, where is the most dominant international tourism, we've seen 80% decline of international tourists in 2020, and we've seen 30% decline in fashion and footwear sales in turnovers. On other hand, we have seen 27% increase in e-commerce sales in region. So this is give you a little bit of understanding how the market has been affected. Yeah, and the retailers were coping with the situation in different ways. If you are operating the stores across the globe, you are able to manage slightly better because you can shift the goods. Not all the stores were closed at the same time, so you still have some trading. But if you are having a stores only in one country or 3 countries in Central and Eastern Europe, you might be facing to serious troubles. Now everything is being open in almost all the countries in Central and Eastern Europe, so we are observing the recovery of the retail. We cannot comment at this moment after first couple of weeks the performance because everything is a little bit too early. But we will see what will have an effect on the vacancy in the future, as many retailers are still on governmental support or are still believing that they might reopen fully. But there's also the other element that retailers were not able to order the stock because they don't know how long the stores will be shut, what's going to be the demand for their goods. So the goods has not been ordered in Asia, in India, in other locations. So the producers didn't have the orders, so they dismissed their staff, the people, and also the markets, the production markets were affected by the COVID. So you can see in India, for example. So they are not able at this moment to react so quickly for the orders of the retailers. So it might happen that the retailers will open the stores. They will sell the stock which they've got, but they will have not enough of the new stock. So the customers could be not satisfied with the offer. Yeah, and this could be a serious problem that can appear a little bit later on. Yeah, if you did not manage your delivery and ordering of the products well in advance. Yeah, and you don't have a wide network. Different category is F&B, the restaurants, especially in the locations where you have got big proportion of the customers are tourists, and also the office developments where you've got a lot of people commuting to every day to work. We've seen that 50% of footfall dropped as well in the office developments with the retail component on the ground floor, which mainly affect F&B operators. Yeah, and we will see how quickly this trend will come back, that people will be going to offices, or how this is going to be changed. But we believe that this recovery will take from 18 to 36 months. The market based on depend on the location and how important are the international tourists.
Very interesting, Jan. Especially the data that you mentioned that show that the situation of different, pretty much the same segment, but in different countries was very different during the pandemic. Mm-hmm. Would you also be able to comment in terms of specific formats? Was there a different situation? Because I understand that shopping galleries were affected to a bigger extent than, for instance, retail parks, where you were able to access the units from the parking area, right? So that also played.
I will comment that the city center locations, where you've got a big proportion of tourists, were affected the most. So the drop was of the footfall was more than 60%. Yeah. On other hand, when you see the locations where you've got the retail parks, or is it in the regional cities where the project is well accessible for local people by car, rather smaller project, the drop of footfall was 10-15%. So not so much dramatic, but we also seen that the average basket increased by 5 to 7% as well. So people went to store less, but they shop more.
Yeah, that makes a lot of sense. And you also mentioned a very interesting figure in terms of the rise of the e-commerce sales. From your perspective, do landlords try and take advantage of that, organize pickup points for orders that are being made online?
Retailers who are tenants in the shopping centers try to organize themselves for sure, and this was a big takeaway that they really try to use their shops as a pickup point, to use this their existing network as an extended warehouse and logistic, which helped. Also, the landlords were supporting small logistic boxes by shopping centers, because you provide great parking, so people can come and pick up the goods. So everything, the situation accelerate a little bit of a revolution in retail, and this need of omni-channel. So we can see, and has been proven, that only online cannot survive, because they need those last mile delivery strategy and the pickup points. And also those retailers who don't have online notice that without online it's pretty difficult to survive. So, but those two worlds has to live together, and I think that the retailers who will survive are those who will have great strategy in omnichannel in the future.
Okay, great. Thank you, Jan.
Also in F&B, doesn't have to be in fashion and footwear, but also in F&B, you've seen that all those pickup points and those home deliveries and office deliveries really grown, and people get used to pick up the goods and eat at office or eat at home, etc. So, and they get this habit because it was almost for a year, so it's long time enough to get this as a new habit.
Yeah, and it got ingrained in what we do. Yes. That's a fact. Thank you very much, Jan. That's very interesting insight. Mira, Jan pointed out that the market was affected differently, depending on location, depending on format. And do you see any recurring trends in what measures are being proposed by landlords to assist recovery of those assets?
Yes, of course, because the biggest problem, which was because of COVID, was lack of significant reduction of income, and this is actually the biggest problem for landlords, and they are trying to introduce some measures. And depending on type of assets, for example, in hotel we had prohibited short stay. And some hotel operators have created something like type of rental agreement for medium term, for let's say 2, 3, 4 weeks, and you as guests, you can rent the apartment and you can stay similar to apartment rented by private individuals or through PRS. So this is one. Second, for example, in case of retail, this Jan already mentioned that the shops started to be pickup points for some ordered goods. But there is problem as well with small shops and small owners of shops. They don't have capacity to propose you online, let's say, sale, and therefore some property managers, like for example Cushman and Wakefield, we have proposed to prepare marketing tools for smaller shops, and they could, thanks to that, they could order as well. Clients could order as well goods through this platform. And for example, in case of office buildings, really the online work was predominated, and some landlords started to create flex space especially on ground floor or on first floor, and this was open to potential tenants, which can be treated as, let's say, guests and use the full infrastructure. So I think this, but of course this is not big result because anyway, stay without clients is the biggest problem.
Sure, and I understand that that at this stage, when investors are looking at these efforts, do they require more time to have more clarity on where the market is going, or are they able to accept certain risks, in pricing, for instance, and go ahead with investment? Because that's, I think, one of the most important questions now, right? What will happen to the bloodstream, pretty much, in terms of investment going forward, so fueling development in the coming quarters?
Yes, but the most important factor which impacts investors' decision is secured cash flow. And therefore, in case of hotels or retail or even some office buildings, there was problem, and we have seen as well a different approach of majority of investors, which didn't want to enter into any transactions in this segment. And last year there was really very big try of us as agents to offer on the market for sale retail properties and hotels especially, but almost no deal were concluded. Okay. And this is as well a confirmation that unfortunately investors are as well looking for secured products, and opportunistic acquisitions are only from time to time, and only in case you can accept as owner a very low price.
So most of the market, I understand, is playing the waiting game, and if offers are being made, the levels are that low that landlords are rather sticking to their properties and waiting than going on with sales, right?
Yes. And in addition, one factor which is quite important is financing, because majority part of investors require as well a leverage, and therefore banks have a lot of banks, most probably Justyna will tell this as well, but a lot of banks are heavily involved in hospitality, retail and offices. And because of lowering rental income, there was as well problem with payment of loan installments, and banks started to be less open for offering financing. So this is all connected, and therefore investors, they couldn't receive financing from banks, and therefore this was as well big part of in their strategy of equity, and therefore they were not eager to accept as well investment product. I see that now, for example, from my perspective, I see that all investors, when we are selling any property, first question is, okay, maybe in a product is maybe interesting for us, but could you assure us that the bank will give you as well loan? So therefore this is so connected, and investors which would like really to buy empty property they would like really to, like I told you, to obtain very, very good conditions, and this price will be just too cheap for the owner.
So Mira, you've mentioned that in terms of the office space, the hybrid way of working has been predominant. Kevin mentioned that as well in terms of the situation on the office market. Do you see any new trends in terms of what other products investors are currently looking at to fill in that gap in order to find something that may be suitable for investment in this difficult time?
Yes, of course. So hybrid model has impacted office sector, but also residential sector. And because employees have to work from home, they pay more attention to work in good conditions. So very often they would like to have minimum 1 bedroom plus additional separate space for work. And therefore as well, now because of problem with short-term stay, you know that, for example, in Poland, we had a lot of offer on the market for tourists. This was just short-term stay offered by private individuals. So the market has changed, and the apartments which were till now presented as let's say we for short-term stay now have been offered for long-term and with slightly dumping prices. So therefore, we have observed that some people have even rented bigger apartments now just to have a comfortable situation and comfortable working conditions. And the price is lower than this what they paid some time ago. So this is quite good market for tenants. And therefore, as well, we see that there is a change of appetite of investors, which in the past were more focused on office buildings, on retail, on hotels, and now they are looking for investment in residential sector. And in Poland, we have already PRS market, so apartments for rent. You have student housing also, and we see also quite big change in respect of developers. Some developers which till now were involved in developing retail or office buildings, they have started now as well to develop residential buildings. And this is overall trend. In Poland, this PRS market is in very early stage, but in some other countries, this is already so important part of investment market. And I can tell you that, for example, in Ireland, PRS transactions last year amounted to slightly more than 50% of the total volume of real estate transaction. In Poland, this is only few percentage, but we see overall change, and a lot of investors are looking really to invest in this sector because this is anti-cycle, standard cycle, yes, because when you have problem in office, you can have really quite different situation in residential.
Very interesting, Mira. And one of the very interesting points that you've made is that in terms of the transactions, financing plays a very integral part now, especially in terms of new buyers coming in and buying existing property, trying to understand if they will be able to secure financing, given a lot of question marks that we already have on the market, given the current state of the pandemic. Justyna, how do you see this situation from a lender's perspective? Because obviously 2020 was different than any year, and all of us mentioned that there have been problems in terms of loan repayments. There's a lot of question marks where the market is going. So I think that it is I imagine it's a totally different landscape now than it was a while ago, right?
Yes. Well, it is a new experience for the whole market, definitely. But first of all, I would say that the COVID impact was in fact not as strong as we expected a year ago. despite all the turbulences in the market, the whole uncertainty, the wait and see strategies of, in case of many investors, in fact, real estate segment proved to be, remained quite stable and proved to be still attractive to lots of investors. Of course, there are certain factors that help this sentiment, let's say. First of all, this is still the very low interest environment. Probably also quite limited alternative investments from a fund point of view or any other investor point of view. And also, I think what has also helped is the huge liquidity. So if you have lots of money, you need to invest them somewhere. What was noticeable, as it was already mentioned, was that the investors at the very beginning, they focused on very, very prime assets. This is a normal behavior in any uncertainty, or I don't want to say crisis situation in the market, that you first of all focus on prime assets, just to be on the safe side, should the negative scenario develop. I agree with Mira totally that residential, also in our part of Europe, I mean CE, became really a hot topic. We are getting lots of inquiries, maybe not every week, but quite often regarding residential, and this is exactly the experience of all the other lenders. Yes, right now, what is maybe keeping us busy, or what we are carefully observing, is in which direction the trends which have been accelerated by the corona will develop. I mean, here, first of all, what was already discussed and elaborated in detail by Jan, what will be the new formula for retail. It was already before the corona that everyone expected a kind of a redefinition of the retail segment, not only from the perspective of consumer, but also in terms of the relationship, let's say, or between the landlords and tenants, where this will go, what will be the fundamentals of such a relation. Then the other aspect would be the future of the work model. Whether the hybrid formula will stabilize, what kind of changes to the office space will be required to meet the new needs of the office tenants.
And I understand that, given your position as Berlin Hyp AG, you're also witnessing on a market level, I imagine, rising problems with repayment of loans, right? Specifically when we're talking about segments that were hit the hardest. Is that correct?
We as Berlin Hyp are quite lucky not to indeed have such problems, because we, by design, we are more low leveraged focus, and in many cases our loans are based on interest only formula, and of course interest at the current interest level does not require a huge income to be able to be repaid. But in general, let's say not problems, but issues with repayments were, of course, first of all, in connection with the assets that were directly impacted by the COVID situation, lockdowns, and so on. So first of all, these were retail financings, hotels, and so on. In terms of offices, the impact was rather limited, even if certain retail tenants somewhere in the ground floor needed to have a break in their operations. This was in fact without any bigger impact on the, let's say,
overall performance.
Exactly, availability of the project to serve the interest. My experience is that the lenders were in general open to discuss, to help their clients, and were positively reacting to any request for interest or repayment suspension. This was of course possible due to the fact that the financial supervision authorities they helped us with a non-statutory memorandum or some more memorandums on the basis of which a suspension of loan repayments didn't need to be, could work without any reclassification of the loan to non-performing loan or so. Yeah, so, yeah, but in general, as I said, I think that there was a good understanding, common understanding. Each case was worked out on the basis of an individual agreement, individual solution.
So I understand that you perceive the role of both property managers and landlords as very active in this field in terms of trying to reconfigure what's going on in terms of a P&L.
Yes.
Okay, that's very good to hear.
Yes, definitely.
So, you know, given all of the things that we've said today, do you think that a recipe, let's say, to limit a part of the problems would be going into more of a direction of more financially resilient, mixed-use projects that can be repurposed, you know, in a given lifetime? Mm-hmm. Would that, from your perspective, make? And I'm opening up a general conversation here. If you could just cover maybe this topic, what we would see as a remedy going forward, given what we're seeing on the market today.
Mm-hmm. If I may maybe add from the lender's perspective, I think that we as lenders, we will continue to look at the property fundamentals. So again, we will be looking how sustainable the value of the property is. In this respect, what is becoming more and more important is the green aspects, sustainability of a property. This is both on the lenders and on the investors' side, I believe. From the bank's perspective, maybe what will be changed, what has changed already, is a kind of an additional element in the analysis of the risk profile of a transaction, meaning whether the property is or is not COVID resistant. In this aspect, we will not only analyze the profile of the property, I mean whether this is logistic, whether office or retail, but also we will look at the profile of the tenants themselves.
Great, thank you very much, Justyna. Kevin, your view?
Yeah, I think just to echo what Justyna said, I think across all sectors, that tenant covenant is incredibly important, whether they're manufacturers, operators, retailers. In response to the sort of the repurposing part, I mean, again, over time, some assets, whether they're retail or office in let's say poorer locations which aren't functioning properly, could be sort of considered for repurposing. One trend could be repurposing offices into residential. The underlying factor really is whether whether those assets can be acquired at a price, considering the amount of, let's say, change that might need to happen, whether it's from a permitting and purpose point of view, into reconfiguring those into suitable residential apartments is a strong question, because of the margins in the rental sector, for example, is quite. So we're slowly seeing a little bit, or certainly increased interest in that, but not too much movement. But again, and as I said, as Mira mentioned, in the PRS sector, definitely more investors are looking to get into that because it seems to be a more defensive asset class. But there is a very small amount of supply. Poland and Czech Republic have a greater level, and we've already seen some strategic acquisitions with Heimstaden in Czech Republic and
Poland, yep. as well. Great. And
so some good activity going on there.
Great, thank you, Kevin. Jan, Mira, closing statements from you, if I may.
So we are sort of more stable in Central and Eastern Europe because our product is still younger than Western Europe. Yeah, because the retail product is older in US, in France, in UK. So we are learning a lot about the repurposing of all the retail products, which are more, in some cases, older than 40, 50 years. Yeah, so in Central Europe, the oldest shopping centers are like 20, 25, 30 years. Yeah. So we're still quite young. And so we should be very well observing what's going on the West and in America, in Asia. And I think that what it's important to be, is be flexible and have sense of partnership. Yeah, so retailers, they would be prepared to do decisions, commitment, but they will require some kind of flexibility in their release contracts.
Yeah, understood. And it's totally understandable. And Mira?
Yes, I would like to add only regarding assets which are not performing well, that really this what Kevin told is quite important to look into conversion possibilities. And in this is very important as well the planning status of some properties or just land, because even when you have good idea for changing purpose of the building, like of hotel into resi, of office into resi or into senior housing, for example, then in master plan you cannot have such flexibility, and waiting for change of master plan is a very long process, and therefore I think it would be good to have a joint initiative, governmental initiative, really to help and to make a little bit more flexible planning in each country. I'm referring to Poland, but I think in other countries, most probably this is also important.
Very interesting point.
And in addition, just one point, that the biggest problem is with smaller assets. And for smaller assets, we don't have investors. So it would be good, at least from Polish perspective, that we'll have local capital. And at the moment, we have only let's say 2 governmental investors and almost no investors, private investors. So we don't have REIT. So this is all what needs to be really done, and this need again initiative of government.
Yeah, that's very much true. Great, thank you very much for a very interesting discussion. I definitely have a lot of more clarity in terms of where we're at and where we're going. Looking forward to more discussions and talking to you in the breakout sessions. This concludes our panel, and Mateusz, over to you.
Thank you.
Thank you.
Do widzenia.
Thank you. Bye.
Szanowni Państwo, dziękuję, że są Państwo z nami. Przed nami już za chwilę kolejny panel dyskusyjny, który poprzedzi niezwykle ciekawa prezentacja, z której to dowiemy się, jak przebiega rewitalizacja, modernizacja w Wilnie. Naszym gościem będzie Gediminas Rutkauskas, który towarzyszył już nam kilka lat temu, dokładnie w 2018 roku, i mówił, jak tam, na tamtym rynku wygląda sytuacja związana z rewitalizacją i modernizacją. Dziś po latach znów będzie z nami, więc przekonamy się, co się zmieniło i jak my możemy czerpać z doświadczenia naszych wschodnich sąsiadów. A na razie zapraszam Państwa na krótką przerwę.